Yeah. Surprise, a little different than you used to. Yeah. Dropping these bars on YouTube, knowledge I introduce you. Yeah. We chasing this money like it's the prize, it's the voodoo. Fugazi, fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck. All right, good evening, everyone. Thanks for joining on a Sunday evening at 6 p.m. I normally do Q&As, or did used to do Q&As, and been very, very busy to do this, but I kind of signposted in the last live that I was going to be doing this evening, and thank you so much for joining, and thank you so much if you end up on replay as well, like I know many of you do. So we've been talking a lot about mortgage rates and what's going on in the market right now. And on Thursday, I had Fumi on, who basically ran a bit of a mortgage clinic, offering some tips, some advice for people who may be worried about interest rates right now. And we learned quite a lot from that stream, and lots of questions have come in off the back of that as well. And this evening, I want to talk about something that is almost an extension of that conversation. That's conversation around actually overpaying your mortgage. And I guess now more than ever before, it is as relevant as you could probably want it to be. Is there the possibility that if you do have a lump sum of money, you pay down your mortgage, especially if you're coming to renewal of a fixed rate? And we know that 1.4 million fixed rates are coming off their deals right now, most of which are going to be on 1% fixed rates or 2% fixed rates. And it looks like the new norm is going to be around about 4 or 5, roughly around about there. So making overpayments can help you manage that mortgage payment. However, on the flip side to this, what we do know is that not a lot of people are able to overpay their mortgage because you need to have a lump sum, or in most cases you need to have a lump sum. And that is definitely changing with obviously startups and tech services that help you do this, even if it be by your weekly shop. And that's what I want to talk about this evening on this live. But before we actually get started, I do have a guest who I'm going to bring in a moment. There is a QR code down in the corner of this window right here. You got that little red arrow literally right here, right there. There you go, right there. If you scan that QR code, it's going to take you to download an app called Sprive. Now, when you download, you will get £5 as a bonus, which is basically a reward for you trying the app. And you can then use that £5 to actually overpay your mortgage. And we're going to show you some really, really cool stuff this evening, where I don't want to give too much away because it's going to be really, really cool. But literally scan the QR code and download the app. And I'm going to bring on Janesh at the moment, who is the creator of Sprive. And we're going to talk about a little bit about what the app actually does. We're going to talk about the market, the mortgage market and rates, his views working in the space. And we're just going to run a little bit of a demo, which I think will be really, really useful as well. As ever, if you do get benefit from this, please make sure that you smash the like button. And if you haven't already subscribed, please subscribe. So I'm going to bring in my guest now, Janesh. Janesh, welcome. Thank you so much for joining me this evening on this live and actually taking the time out to talk to us.
No, Pete, thanks for having me.
Cool. So I've already given a little bit of an overview, an introduction to you, but can you kind of just give us a little bit around your background and how Sprive came about? We've already spoken about this on the podcast, but for people who haven't seen it on the podcast, I think that was last year or so. Do you mind giving us a little bit of context?
Yeah, sure. So like you mentioned, Janesh Vora, the CEO of Sprive. So my background is actually nothing to do with mortgages. It's actually investment banking. So when I left university, I kind of left to kind of join investment banking at a company called Goldman Sachs. Was there for 14 years. And while I was there, my wife and I got married and we bought our first home. I remember getting the mortgage offer document and saying for every pound that I borrow, we're paying like 50p in interest, and went through the journey of paying that mortgage off. And very quickly, I realized that it was actually quite a painful process. And so we've essentially gone away, left my corporate job and built some tech to help other people do something similar, i.e. save money on their mortgage, pay it off. And that's Sprive. And look, we launched about 18 months ago. Now we have over 23,000 customers using the app.
Wow, that's fantastic. And when we spoke, I think for the app, can't remember how many you had there, but it sounds like you've had quite a bit of growth in terms of people actually using the app and finding it useful.
Yeah, I mean, we'll talk about it I think throughout this conversation, but it's a tough time for homeowners in that they're so laser focused now on how they can kind of save money on their mortgage. For the average homeowner, their mortgage is their largest household commitment. And so a lot of people are looking for innovative kind of solutions, and we're the only ones in the market really doing what we're doing. And so now it's been a great time to see how we can go about helping just ordinary homeowners kind of overpay, save money on their mortgage. And I've had the pleasure of actually meeting some of our customers and just kind of seeing how we've been able to impact their kind of financial lives in this tough time. It's just been really rewarding.
Fantastic. So what are you finding at the moment with obviously mortgage rates moving quite a bit? I think there's been a little bit of hysteria over the last maybe 2 weeks or so because we don't know what's happening with the Bank of England base rate. But what's your general observation working in the mortgage space right now?
Yeah, I mean, if you take a kind of a step back, obviously rates, and everyone will know this, is rates have just gone rapidly. Like they're at 4.5% in terms of the Bank of England interest rates, and we were hoping that would kind of be around the peak, and that inflation, was expected to kind of come down, and then hopefully that will kind of stabilize things. But unfortunately, we're just looking at kind of the latest inflation figures. I think they're at 8.7% inflation's at, and it's behind kind of the rest of Europe and where the Bank of England and others were kind of hoping inflation would be. And so that's kind of now suggested that actually rates will go up even further. And obviously there's no guarantees with this. So, I think this may not happen, but it's predicted that maybe interest rates will go up to 5.5% in terms of the kind of the base rate. And obviously as the cost of borrowing becomes more expensive, lenders are obviously very quick to then kind of pass that on to the borrower. And so what you've seen over the last 2 weeks is lenders start to reprice their mortgage deals. And so typically, kind of speaking to the advisors that we work with, we've been seeing deals go up by half a percent. And so it's a challenging time. I think people, there's, like you mentioned, 1.4 million people due to refinance this year. And so for those whose fixed deal period is coming to an end and they're shopping around, they're continuing to see higher rates means high monthly payments. And so obviously it's important to kind of really look around and kind of make sure you find the best deal that you can get. But obviously, rates aren't where people are hoping. I assume we're hoping that things will just stabilize. But unfortunately, we're seeing that's not the case. And we've seen like HSBC, for example, pull deals as they look to reprice. A lot of the big lenders have seen a big volume of people really trying to rush and lock in rates because they're kind of hearing in the news that rates are going up. We're seeing something like the average 5-year deal around 5.49% at the moment, and the average kind of 2-year fixed mortgage around 5.82%, which is obviously high. Most deals now are above that kind of 5% mark, and obviously a lot of people who are kind of in those fixed deals before they're looking to remortgage, that like you said, they're paying anywhere between 1% and 2%. So it's a big shock for people for sure.
Yeah. I mean, I've already shared on the channel, I'm actually in that boat right now. So my mortgage comes up in October. I'm on a 1.49% at the moment. And so even though I've got quite a lot of equity in the property and the mortgage isn't really that large in relation, one thing I'm thinking at the moment is, well, I'm going to go from a 1.49% probably onto something that is going to be more in the region of 5%. And, from the video that we did on Thursday with Fumi, there are so many people that said, what rates they've been able to lock in. A few people have been able to get sub 5. A lot of people have quoted 5+. So that's where I'm kind of thinking I'm going to have to lock in. And it's definitely brought to the forefront of my mind. Okay, so do I make an overpayment on my mortgage just to keep the mortgage cost in terms of the increase down slightly? And actually, to a certain extent, kind of have that little bit of a peace of mind that I've actually wiped off quite a few years off my mortgage term and obviously the interest, which is where this conversation and what you guys do at Sprive comes into the equation quite nicely, because this is the stuff that you talk about all the time. The impact of what these overpayments can do in terms of the interest is actually quite staggering a lot of the time.
Yeah, I mean, for sure. I think when you're looking to remortgage, it's a really good time to kind of think about whether it makes sense, if you can afford to pay down a bit more of the debt. We'll look at it in a second, but the total cost of debt, it can be eye-watering, especially when rates have increased so rapidly over the last kind of 18 months. And a lot of people don't really kind of think about it. They think about the monthly payments because that's what you need to pay here, there, and now. But obviously lenders are there to make money. There's they calculate interest daily. There's amortization, and so the numbers are scary. And I think thinking about your loan to value, I think, you know, if you like, obviously you're in personal finances, so you're thinking about it completely the right way. But your loan to value plays a huge part when you're refinancing and what deal you can lock in. And so so if you're at like 60% is like the lowest loan to value. If you're at 60% loan to value or better loan to value than that, then you'll get the best deals in the market. And generally the way the market works, they work on 5% loan to value thresholds. And so, you know, the average person, you ask them what's your loan to value, and they will have no idea. And that's one of the benefits of Sprive, and I'll come to that. But if you can get below the next loan to value threshold, or even a few notches down, then that will make a difference in terms of what deal you can get for sure. And I think, like you said, if your balance is lower, then you'll be paying less interest on that at a higher rate. And like you said, you'll knock years off, which is not a bad thing, right? Ultimately, do you want to be in your 60s, still having a mortgage to worry about?
Yeah. And just for those of you who may be watching, who might be asking, you know, what loan to value is and how do you check this? One of the best things that you could really do is maybe take a pulse of what a similar size property around your area is worth. And a lot of the lenders, so let's just say, for example, if you're with Halifax, they might have a book valuation. A lot of them have apps now, so you can go and check out what the book valuation for your property is. But the loan to value is all about how much you owe versus the value of your home. And as Janesh has just explained there, you're going to get better rates being offered to you if you have less debt against versus the value of your home. So for example, I think our mortgage at the moment, just having a look at it last week, we're about a 40% loan to value right now at this stage. So making an overpayment for me would mean that I eat into that quite a bit. Hopefully will help me with obviously a better rate when I get round to actually discussing this at some point next week. But also it's going to shave off obviously my interest, the interest I'm going to pay on the mortgage altogether, and hopefully reduce down my term. Well, that can work a little bit differently, because you might want to shave down the term and keep your payments high just to compensate. That means you pay off your mortgage a lot earlier. But the simple fact of overpaying can do wonders in terms of the interest that you actually end up paying in the long term. Would you add to that at all, Janesh, or any of the views on that?
No, I think completely agree. I think it's about kind of understanding the levers that you have based on your finances to be able to see how you can kind of save the maximum amount of interest. And look, we have experts at Sprive that are really fully versed on how do we help homeowners save money on their mortgage, and we've obviously got the tech to help them do that. But also, we've got advisors at our disposal who can kind of put the two together. So it's also like thinking about overpayments, but also thinking about what's happening in the market, just to make sure you make the optimal decisions. Because those small decisions can have because you're talking about the average person like borrowing hundreds of thousands of pounds. Those small like decisions can make a huge impact in terms of the amount of interest you can save for sure.
100%. Okay, so I think there's a few things that you wanted to show, and this will be interesting, guys, just to have a look at this very, very quickly in terms of some of the things that you're able to do within the Sprive app. And Janesh, can you talk us through this and how this actually works for people?
Yeah, so I suppose there might be some people listening and thinking, oh, overpayments, and look, we can talk about what overpayments are, etc. Maybe that's something to kind of go through. But in talking about this particular widget here, so we talked to some customers and they're like, well, actually, there's no way that I can afford to make overpayments. And it was something that because I'd gone through the journey of taking out the mortgage, and I wanted to build an app that helped everyone chip away at their mortgage. It shouldn't be just for the super rich. And so because of the cost of living crisis and the challenges with kind of rates hiking, we thought about internally, like, how could we help people? And so we came up with the idea of what we call a shop with Sprive. So everyone's got to do their grocery shopping, everyone's got to live, and so you got to do you might get a few takeaways, you might you obviously buy some clothes each month, etc. And how cool would it be is if you did your everyday shopping, and as you did that through the app, you essentially get extra money that you could then pay towards your mortgage with one tap. And so here's just an example. We've got an online calculator, so anyone can play around with this. Just go to sprive.com and you'll see we've got some calculators, and this is our kind of cashback calculator. But essentially, in this example, we've got like a £250,000 mortgage. Your monthly payments are around £1,500 a month, 25 years left on the mortgage. But what I want to show here is, say for example, your weekly shop is say £500. Then if I add that in, you can see just by using the app on a regular basis, you could save nearly £5,000 in interest and pay off your mortgage 6 months earlier. Now, say for example, then, and just on the grocery side, we partner with M&S, Iceland, Morrison's, Waitrose. In a month or two, Asda and Sainsbury's will also be coming along. So we've got some really cool grocers. And look, if you've got a family, it's and if it's anything like mine, we easily do £100 a week shop. So say for example, £500, that's a good chunk of cash. And then you just add takeaway, maybe you spend £100 a month. Suddenly, if you did, that's going to save you £7,500 in interest approximately. Then maybe you spend £100 on clothes a month, and then you can see suddenly you're saving about £9,000 in interest and a year off your mortgage. So the premise of the reason why I'm showing you this is that the app will help you chip away, etc. But even if you feel like you've got no extra money to be able to make overpayments, you can still make overpayments with Sprive using the Shop with Sprive feature. And I'll do a demo later so you can visualize and see what it looks like. But we have over like 40 brands, and really cool brands that people use on a regular basis, and the numbers are just kind of really compelling in terms of how much you can save if you do it on a regular basis.
So this is essentially using almost like cashback and having that money go towards your mortgage effectively.
Yeah, so the way it essentially works is, say for example, let's say the weekly shop like Morrison's or M&S, and your shop comes to say £125. Then within the app, you type in £125, you hit pay now, and a QR code would appear essentially. And when you do that, you scan that out at checkout. That will then pay for the shop. And then within 15 minutes, say for example, M&S, the 5%, that cashback would be credited to your Sprive account within 15 minutes. And then by hitting one button, that can be paid to your lender.
Nice. And you facilitate, how does it work in the back end then in terms of the facilitation of so you've done this, you got the 50% discount, it's been credited to the Sprive account. How do you then facilitate the whole, this pays off the mortgage? Is that done within app, or do customer side then have to contact the mortgage provider and say, I'm going to make an overpayment? How does that actually work?
No, it's all seamless. It's all integrated. So we work with 12 of the largest lenders in the UK. So if you've got a mortgage with like Barclays, NatWest, Santander, Nationwide, etc., we support all the big lenders. And it's as simple as, once you set up the app, it takes literally a couple of minutes to kind of sign up. You link your bank account, provide us your name, address, date of birth. You can set your kind of min and your max, which if you have no money, you can set it to the absolute minimum. And then once you get into the app, you can kind of pause any auto saves that we do. But that'll be a bit more clearer when I do like a run through of the actual app. But essentially, when you sign up, we know everything about your mortgage, which allows us to then configure and make these overpayments so easy so that you just hit one button and the payments go real time to your mortgage lender.
So I'm guessing you're using like an open bank license to be able to get the information securely and everything.
Yeah, exactly. So we've got like integrated tech that allows us. When you sign up, as soon as you link your bank, what we push back to the customer is a list of the mortgages that they have, and then they select the one that they want to overpay, and then once they select that and they've signed up and then created the account, it's all configured. That's the beauty of the tech that we built.
And I'm a little curious, what has the journey been like building this out tech-wise? I mean, it's a pretty big idea, like to bring it to the stage where it is right now. How has that journey been?
Yeah, I mean, I'm a first-time entrepreneur, so I spent 14 years in the corporate world. So it's an interesting journey. It was definitely harder than I thought it would be. I think you don't really think about it until you kind of go into it, and then and then you realize, wow, it's you know, there's a big kind of challenge that I've set myself. But you take each day as it comes, and we have a great team at Sprive, and yeah, we're really pleased in terms of, you know, how far we've come. We've won industry awards. We've you know, we've got a lot of customers that are very happy. So yeah, we just keep trying to push and do more, and we've got some amazing ideas on other things that we can do to help homeowners kind of save money on their mortgage. We're playing around this idea, and there's no guarantee that this will happen, but one of the ideas that I really like is a button in the app, and every time you press it, you watch an ad. But every time you watch an ad, you get paid like 50p or a pound towards your mortgage. And just another way, like Shop with Sprive, where if you can't, you know, if you can't afford to make overpayments, you can still chip away and make a significant difference.
Yeah. So what's been the feedback from your customers generally when it comes to Shop with Sprive? Have you found that there's been maybe a little bit of reticence or uncertainty about using it? What's the feedback that you have had from people who are using it?
Yeah, so it's not the core like purpose of the app. So the core purpose is to kind of like set aside spare cash based on their spending, and we use AI to kind of help people do that. But we added this as an extra feature, and what we found, and it took me by surprise, is that it's become really popular in terms of the customers taking advantage. And obviously, it's a sign of you know, given challenging times, people just want to be able to like chip away. And what we find is once people start using it, and they kind of get used to it. I think the first couple of times it takes a little bit of getting used to, because it's a change in behavior. But once you've kind of worked out how you can kind of make it work for yourself, we see customers just use it all the time. You know, we've got Airbnb, we've got lastminute.com. So when people are booking, like, you know, their summer holidays, they're like I think we had a customer recently who booked a £4,000 family holiday, got £200 towards his mortgage. And obviously,
Nice.
if you're paying like 5% on your mortgage, that's £200. That isn't just cash back that you'd get from like a Quidco or Top Cashback. It's getting invested into your mortgage, and so it's getting invested. And you're getting essentially you're getting 5% on that, which is obviously good as well.
Yeah. I think the main thing that I think when you told me about this last week was it actually just gets people to think about maximizing the stuff that you're already doing and being intentional. So you're going to book a holiday, you're going to go and do your shopping anyway. So while not be intentional and use that as a function to help benefit another area of your life, particularly in your finances. So you're spending money, but you're also making that money that you're spending almost work for you as well in a very, very ingenious kind of weird way.
Yeah, and I think what the other thing is, it starts to, because like when you see the app, it starts to get really addictive in terms of, you see, oh, I'm on track to maybe save 6 months off my mortgage and save £5,000, and then you do a little bit more, and then you do a little bit more, and because you can start to see the benefits, like the average customer at Sprive is on track to save £12,000 in interest and pay off their mortgage 4 years earlier.
Wow.
So you know, like that's a significant amount of money. I mean, for £12,000, you could buy a nice car with that. So
Yeah.
yeah, it just kind of gets more and more into that culture, and it's very goal focused, because ultimately people come to Sprive because they want to ditch their mortgage. The stats are like ridiculous. It's something like 3 million people in the UK will have a mortgage past the age of retirement. So, you know, in their 60s, will still have a mortgage that they need to worry about. And we want to change that. You know, we want people to take more control of their lives. You know, I'm in a fortunate position where I paid off my mortgage, but if I still had a mortgage, Sprite would have never, would
Been
never have
born.
been born, because my wife would have never allowed me to kind of quit my corporate job and take this risk.
Yeah. And actually, so I need to go on a little bit of a tangent very, very quickly on something you just mentioned there. That 3 million people are going to have a mortgage past their retirement date. And I think this is just a bit of information for everyone who's watching this. I talk a lot about pensions and the importance of a pension, or at least having some kind of retirement provision. If you are maybe in your 40s or so, mid 40s, this is definitely going to apply to you. If you're within that age range and your mortgage is going to last past, say, 66 or around about 65 or so, what they will start to ask you is whether or not you have any pension provisions. And I've seen this certainly for people who are maybe in their 50s, 55 or so, looking to remortgage for that, maybe that last little stint. The question around what pensions you have, what retirement income provisions you have will come up. And that kind of lends to the conversation of, try and look after this stuff a little bit earlier. It's a little bit of an off piece, but I think it's a really important point to kind of make on this live, because these topics often intertwine, and in this case it really does. Can you just show us very quickly your mortgage interest calculator, Jinesh? And also there's a question here which I'm just going to pop up from Emmanuel, asking you, are you able to partner with Costco too, or is that one that's on the list maybe for you to partner with on that shop Spy?
Yeah, no, it's I'm always looking to add more and more partners. The kind of the conversations I have with these organizations is that, look, it's a tough time for your customers, and this is a really good good way for you to kind of differentiate yourselves and show your customers that you really care, and you're here to help. And so look, we started with we've got Morrison's and M&S, and now we're adding Asda and Sainsbury's. So yeah, Costa's on my list, so I'll give it my best shot. No promises,
Good,
but I am trying to get as many great brands as possible.
Good man. All right. So what we're looking at here, so this is your interest calculator, right?
Yeah. So this is basically the cost of debt. So and I thought it might be kind of interesting because you talked about early on that rates were around yourself, for example, 1.5%. And I thought it would be just kind of interesting for people to see that if they don't know the cost of debt. This is kind of one of the first screens you see if you download the app, and it's just to give you an idea. It's just it's not supposed to be exact values. It's just something you play around with just to kind of get an idea of maybe how much interest you might pay over the lifetime of your mortgage. So say for example, I've just kind of placed it to roughly around £250,000. Maybe you've got 30 years left, and if I just play around with this slider, so rates, people were on 1.5, and maybe now they're looking to refinance, and it could be anywhere between 5, 5.8, and if rates go higher, maybe even higher. But you can see how the total cost of interest over the lifetime of the mortgage, because these are big amounts of money you're borrowing for a long period of time, and interest is calculated daily, and it's through amortization. It's front loaded, so you pay a majority of your interest in the earlier years of your mortgage. It's not something a lot of people realize, and it's something that took me by surprise, even though when I was in financial services, that at the beginning of my mortgage, nearly 60 to 70% of my monthly payments is interest. And later on in life, then you really start to pay back the kind of the bulk of the amount that you actually borrowed. And so I thought this was kind of quite a nice visual, and you can kind of see if you move if you're borrowing more, then these numbers become scary in terms of this is just not paying back the amount you actually borrow. This is just paying the lender interest, and this assumes that the interest rates will kind of stay throughout the remaining term at that level. But it just shows you and gives you a good illustration in terms of the cost of debt. And if I bring it back to 5% or 5.5%, and bring it back to around 250, and then I would show you this. That shows you the power of overpayment. So if you can afford £3 a day, you could save £40,000 in interest. If you could afford £5 a day, you could save £62,000 in interest. If you could afford £10 a day, you could save nearly £100,000 and shave 10 years off your mortgage. So the idea is that this is just an illustration to show just by kind of regularly chipping away at your mortgage, you'd be amazed at how much interest you could save. Before I started Sprive, I was of the opinion, and this is how I kind of went through my journey, is you make one overpayment maybe or once every year or 2 years, and you shouldn't have to do that. You can just regularly chip away. And we use smart AI to kind of help people based on, we analyze your spending to see how much you might be able to kind of afford. But these numbers, if you do it regularly, and the app makes it super easy to do so, then the kind of the numbers you can save and the impact that you can have is absolutely compelling. And the good thing is it adjusts to your lifestyle. So in weeks and months where you spend all your money on holidays or bills, etc., then you take a lot less compared to months and weeks where you're doing a really good job of saving and spending less, and it's all within limits you can afford. So some customers might be able to afford, minimum they can afford is £1, and the maximum might be say £25 a month. Then we'll work within that range. Some people might be well, the minimum I can afford is £250, and the maximum on a really good month I might be able to afford is £750. And fine, the app just kind of adjusts to that, and then uses kind of AI and open banking to kind of help people just chip away. And if it's not a good month, then they can pause, they can withdraw the money back, etc., which you'll see in the demo.
Yeah, and I think it is quite important as well, just to kind of, you know, I always like to think about planting seeds, if you will, and just the idea that it doesn't take a lot, because I think there is that assumption that you need to have, 5 grand or 10 grand saved up in order for it to really make sense and for it to have an impact. And that isn't the case from the numbers that we're having a look at there. And people may look at it and say, well, actually, £3 a day is quite a lot by the time you max it out through the month. But this is where I would have start having conversations with people about, what do you spend on a day-to-day basis? I mean, most people will spend, I don't know how much does it cost a coffee these days? You're probably looking at about 3-4 quid anyway. So little sacrifices for greater good sometimes is something that we need to think about, and just having that seed in your head around being practical and pragmatic towards this is, I think, going to be really, really important.
Yeah, I think so. And I think at the very least, if you can't give up that cup of coffee, you can at least earn, we partner with Costa and Nero. So at least you can get extra money towards your mortgage, even if you don't want to sacrifice that. And even that will make a difference for sure.
Yeah, absolutely, absolutely. So what's actually next in terms of the bits and pieces that you think might come down the track? And I know this is crystal ball kind of like territory, because we don't really know. But what do you think the mortgage landscape and rates will likely look like in, say, a year or two's time? Because people are like, well, do you think rates are going to go down? I'm like, I honestly don't think that they are going to go down any further from where they are. I think we're in a repositioning process at the moment.
Yeah, and look, obviously, I'm gonna put a disclaimer here. Like, this isn't kind of financial advice, and no one has a crystal ball, right? So, if this is kind of my own personal view in terms of where I think rates will go, but I just want to caveat: there's no guarantees, etc., etc. So, I mean, we're seeing like our customers, a lot of customers are fixing for 2 years. I think it's partly because they want to kind of see in 2 years what will happen, and the thought, like historically, if you go back before the rates started increasing so dramatically, people were generally locking in for 5 years. It was quite common. Like, rates were so low, and so people were locking in for quite some time. That seems to have, that kind of sentiment's changed. People tend to be like, well, rates are really high. I don't like the thought of locking that high rate for 5 years. Seems painful. So a lot of people are doing 2 years, and the idea is that inflation is rising, but hopefully with these aggressive interest rate hikes, they'll be able to kind of get inflation under control. If you listen to like the politicians and Rishi, etc., they've set their targets and they seem pretty confident that inflation will come back down. And there's the 2% target, but obviously things haven't gone the way they were hoping, and things are taking longer for them to come down for various different reasons. So, if inflation is comes back under control, then there's a reason why Bank of England might then say, okay, now we need to kind of bring rates down. How quickly they do that, and do they do that to a small amount, or do they bring them? I personally don't think maybe it will go back down to the levels that they were initially, because they were practically zero, and probably it'd be nice for rates to go back down there, but I'm not sure that will happen. That was kind of a very kind of abnormal period. But given, like, also when you talk to like economists and you speak to people at the Bank of England, I don't think the rates that they are right now is like going to be, all things equal, if inflation was under control, that would be the normal rate. I think there would be some sort of downward pressure, given that we've got an aging population here in the UK. So I don't think we're at equilibrium. I think there's factors in play that are driving interest rates up. Hopefully we can tackle them, and then things will start to like normalize, etc. But how long will that take? Will that come down into a slightly better position for homeowners and people with mortgages? Is that going to take 2 years? Is that going to take 3 years? Is that going to take 5 years? I mean, that's difficult to predict. I wouldn't like to do that, because that can be dangerous for people, because people might make decisions on the back of what I say, and no one, to be honest, knows.
Yeah, I'd agree with that 100%. And we can only best guess what might actually come down the track. There is a question. You're going to demo a little bit more for us here, but there is a question as well that someone's actually asked here, and it's just about how you guys make money in your operations. Can you talk a little bit talk us through that?
Yeah, sure. So it's a question I get asked quite often. So the app is free, and we designed the app because we wanted to help people pay off their mortgage, and I didn't feel like it made sense to like charge people for that capability. But essentially, when you sign up, we pretty much know everything about your mortgage, and so what that allows us to do is scan the market every day for better mortgage deals. On a given day, there's probably about 90 plus lenders, easily 20,000 mortgage deals. And so every day we'll see if there's a better deal available for you. And if there is, we'll then help you get that deal. And every time we help people essentially refinance, remortgage, we get paid by the lender. The beauty of remortgaging with Sprive is that because we know a lot about your finances, we know whether you've got outstanding credit commitments, whether you've got late monthly payments. We know things about like what your loan to value is, how much of your mortgage you've got outstanding, all these different data points, which will be very familiar if you've ever applied for a mortgage or if you've ever remortgaged. And so again, for customers, we can make that a really great journey because we have a lot of the information the lender needs to be able to essentially underwrite the mortgage. And so that's kind of our core revenue model. Also, with Shop with Sprive, we make a small amount of money on every transaction. So we try to give the bulk of the cash back to the customer, but for full transparency, we need to cover our costs, and we take a small slice. So that's another revenue stream for us. And then next week we're actually launching a life insurance product also within the app. So a lot of people, with homeowners, you have a mortgage, if the worst happens, become critically ill, or the worst happens, and you want to kind of look after your family, it's important to have some sort of insurance policy in place. So again, we're kind of helping people around that, and we look at like home insurance as well. So it's very much a very similar business model to like a Quidco and a Money supermarket, in that we earn a little bit when the customers shop, and we earn when they switch.
Perfect. That's great. Okay, so whilst you load the demo up, I just want to there's another question that's come in here from someone, and I'll take a stab at this. The question is, if you secure a fixed 1-year savings account with a higher interest rate than your mortgage, is it worthwhile putting your money in the savings account rather than overpaying your mortgage? I think my personal view of how to maybe approach this or consider approaching this is, yes, it's in the savings account. Yes, you'll be able to get a little bit of interest, and the interest rate might be comparable to your mortgage rate. But I think the big thing to consider is, on the mortgage, you're saving yourself interest payments on the mortgage itself, like Janesh demoed before. It will save you X amount of time in your mortgage and X amount of interest, and it really depends on whether or not you're going to need access to the money in the there and now. So those are just maybe a couple of things to perhaps think about. I don't think there is a right or wrong answer. I always say that personal finance is personal, and it's important that you make the decision that helps you sleep better at night, and you think is the right decision for you to make. And I think that should always be the starting point whenever we have these kind of conversations. There are some other questions in here, and I promise, guys, we'll get to these as we go along. But let me just share this other screen, because I know you just put this up, Janesh, and perhaps you can just talk us through what we're looking at here.
Yeah, sure.
This overlay.
Yeah, and sure. Before I do that, I think one of the things I wanted to just briefly talk about is the challenges of overpaying. So there's a few different ways you can overpay your mortgage, and some of you might be thinking, well, why do I need an app to overpay? I can just do it directly with my lender. And I went through the journey, right? So I paid off my mortgage, saved probably around £70,000 in the process of doing so. And obviously giving me the freedom to kind of start Sprive and help others do the same. But one of the things I found through my own personal journey is I was making these overpayments, and I felt like they were going into the abyss. I had no idea in terms of like how much interest am I on track to save, how many years am I on track to knock off, and so I was using Excel spreadsheets to essentially manage this, which is not ideal. And then things like loan to value. So I was very acutely aware that when I'm looking to remortgage, we talked about it earlier, what loan to value I'm on depends, it helps determine what deals I could unlock. And I remember one time I actually figured out that I was on an 86% loan to value, and if I overpaid a little bit more, then I would get below the 85% loan to value threshold, and that would mean I'd get even cheaper rates. And I wish at the time I had an app like Sprive that would just give me that kind of regular visibility. We partner with lender grade home valuation providers, so you can kind of see every month what your home is worth. And when I do the demo, you'll be able to see that. The other thing is every month my finances changed, and like you can set up a direct debit, but then you're committed. You set up a direct debit, and say for example it's £100 a month. Then when you've suddenly spent crazy amounts of money on a family holiday or maybe Christmas, and you spend all your money on presents, you can't pause that, you can't tweak that, etc. And everyone's finances change every month. People spend different amounts of money, so why should the money that you put towards your mortgage be static? And so this is kind of information and control at your fingertips, which I thought was kind of useful as I kind of go through the app and kind of do a quick demo. I think it's useful for people kind of to have that thought on the back of their mind. But essentially, once you sign up, you'll kind of hit a dashboard like this. And there's a bit of a horseshoe. So in this example, someone set their maximum at £100, and they've got a minimum set here. So that's basically saying that the minimum they can afford is maybe £25. The maximum might be £100. So on good months where you're doing a really good job and you're not spending lots, the app might take a maximum of £100 across the month automatically from your linked bank account. But on weeks and months where you're spending lots, etc., and you've got less, it will take something closer towards your minimum. And we do about 3 auto saves a month, and each one you can pause. So you can see here, for example, we're letting you know, and you'll get like a push notification, hey, this month we found £18 for you. And then it's going to be collected on the 14th of June. Now, if that's not a good, you don't want that money to go out, no worries. You can hit cancel, and that money won't go out. And so you start to see a lot of like control. If, for example, just kind of in terms of like the settings, if you sign up to the app and you want to like adjust your min and the max, so you can like bring it down to like £1, you can adjust it, and you can see as you start to move the slider, depending on your finances, how much you can afford. You can kind of start to see how much interest you could save, and this is all personalized based on your mortgage, because when you sign up, we know pretty much everything about your mortgage, and therefore these numbers are like personalized, calculated, so that you see that if I start overpaying these kind of values, maximum I could maybe save is £6,000 in interest, and the minimum would be £1,400, and I could shave a maximum of 3 years, etc. And so it's kind of a really nice way to visually see, based on your mortgage, by you setting the settings in the way you feel comfortable with, you can chip away at your mortgage. Now, you may decide that I got no money to be able to overpay on my mortgage. Then that's fine. You just hit auto saving. You just hit off. And you can indefinitely turn it off. And then you can manually shop with Sprive, or you can manually kind of use a top-up functionality that we have. And then automatically money won't be collected from your bank account. If you want to pause it for a week or a month or 3 months, you can do that. So you have a lot of control within the app. And any money we auto save. So you can see in this example, we've got £61.39 that's sitting in your Sprive account. You say, I need that money for whatever reason, your boiler's broken, etc. If you hit withdraw, real time, that money will go, hit withdraw, and real time that will hit your bank account immediately.
Nice.
And you'll get the money back from the bank account that you've linked. Likewise, if you want to pay that £61 to your mortgage lender, you just hit pay now, and
Nice.
that will real time go to your mortgage lender. I remember when I was making overpayments, this visual number of how much interest you're on track to save, how many months you're on track to knock off. You get to see all those analytics, which is kind of quite motivating. You can see things like early repayment charges. So sometimes you may have heard of that. Like some lenders allow you to overpay, say 10% of the outstanding loan. I remember when I was making aggressive overpayments, I was tracking that through Excel spreadsheets. Well, here you have a widget. You can basically just say, look, do not let me overpay this amount by this date, and then we'll show you how much of your allowance you've used, so that you're comfortable. And we hard code it so that we don't let people without a warning overpay more than 10% within 12 months of using the app.
But it's hard coded, and in opposed to, because I guess the borrowers have different things. Some people are like, you can pay 20%, some are 10%, and sometimes it's of the original mortgage amount, which is I haven't seen for ages. Sometimes it's the outstanding, so you hardwire it for 10%.
Yes, but you can, if you've got anything customized and you feel like you want to just edit it and you want to just get complete transparency, rather than doing what I did, which is Excel spreadsheets, you can just type in the amount and the dates, and then you can track that as long as you're making the overpayments through Sprive. And the beauty is, if you remortgage through Sprive, then we will know everything about your early repayment charges, and we'll track this all automatically for you. So you don't even need to type anything once you remortgage through our team. In terms of other things, if you want to top up, so you want to manually add cash, maybe you've got a bonus or you've paused the auto saves, then you can hit your top up button. You can just type in whatever amount you want to overpay, hit top up, and then that will just be credited to your Sprive account. You'll see, immediately that money will just hit this number here. And again, if you want to pay it to your lender, hit pay lender, one tap, and real time those payments will go to your lender. The shop with Sprive, I'll quickly jump there. So you'll see the kind of brands we've got, the caliber. So Airbnb, ASOS, Nero, Just Eat, Uber Eats, Matalan Costa. Some really cool brands. I mentioned the grocers earlier. So if we take M&S as an example, and your shop came to say £95. Override it at £95. I think because I'm sharing my screen, I'm not on my phone, I can't do that. But say, for example, it was £95 and 32 pence. You just type that in your phone, and then you'll be able to see automatically how much interest, how much you'd get towards your mortgage, what the benefits are in terms of savings. You hit pay now. That will pay for the shop. You'll get a QR code. Scan the QR code at checkout, and within 15 minutes of you doing the purchase, you'll get money credited to your Sprive account, and you'll essentially see it on this available balance. And again, hit pay to lender, and real time that will go towards your mortgage. And then the other thing is live deals. So if you're wondering, oh, for me, what kind of deals will I get? Maybe you're looking to like Pete, for example. You said your mortgage deal comes up for renewal in October. Because we know everything about your mortgage, based on your individual circumstances, you can kind of get an idea of the lowest cost mortgage for a 2-year is with this lender, and this is how much you'd roughly pay at this rate. This is how much it's going to cost you. 3 years would probably cost you this. 5 years will cost you this. You can see what the lowest monthly payments, if that was something that you're really focused on, or if I stayed with my existing lender, what does that kind of mean in terms of deals that I can get? If I was interested in getting a mortgage that allowed me unlimited overpayments because you feel restricted by that 10%, then you can kind of see deals there. And the great thing about this is they've got a widget here. So with a one click, you can speak to my team, professional mortgage advisors who can help you get that mortgage deal, and make sure you get full FCA mortgage advice. And you can also see things like, if I add fees to the loan, what would that do, etc., etc. And to book an appointment with advisors is really straightforward. It's a book appointment, select the date, the time, and at your convenience, you can then have the chat. And like I said, it saves you time because we know a lot of information about you because we're using smart tech. So it's not manual information that a mortgage advisor is writing down, etc. It's a lot of it is automated, so that will save you time if you're looking to switch from a lender A to lender B, as an example.
Amazing. Okay, this is some pretty cool stuff. Let me just get a couple of things up here and then come back to this right here. There are some questions in the chat. I don't know whether you'll be okay, Janesh, if you've got the time just to answer a few of these, would you?
Yeah, of course I do. Yeah.
All right. Okay. Cool. So there was one question, which is a good question, I think.
Sure.
Out of genuine interest, I'm just trying to find it. This is from Anil. He's asking, is Sprive actively recruiting?
Depends on the role. Yeah. At the moment, we've kind of Yeah, if you ask him to just reach out to me on LinkedIn, I'm happy to have a chat. Generally, we're not hiring at the moment, but we're always looking for talented people. So actually, that's just a slight different plug. I'm quite active on LinkedIn. So if anyone's interested in following the Sprive journey, but also my personal journey as an entrepreneur, then yeah, just reach out on LinkedIn. I'm happy to connect. And then obviously DM me, and if you want specific questions like that, I'll do my best to answer.
Brilliant. Okay. There's a question here. So, okay, let me just caveat this, guys. We cannot give you mortgage advice on this. So the response to these will be opinion. Janesh obviously has like a team of mortgage advisors that will be able to give you proper advice around this kind of stuff. So that might be another reason to maybe perhaps go through the app. And let me just get rid of this again, because again, if you literally click the QR code, so you got the arrow, you got the QR code, by downloading the app, you will get £5 from Janesh to go towards your mortgage. Now you cannot withdraw that as cash. It is specifically there to help you to go towards your mortgage. But as you've seen, there is so much functionality within the app around, shop with Sprive, and just how you can actually figure out what these small little interventions will do in terms of the interest. It's definitely worthwhile having a look at. So let me just preface it with that as well. So make sure you scan the QR code and download the app as well. So this is the question. Go on, Janesh.
No, I was just going to say there's a few other screens that I didn't show, but it might be useful for people listening. You can see things like how much of your home you own, your loan to value. So some dashboard screens and additional functionality that actually in hindsight I probably should have shown it. But so that's there's analytics that you'll see as well. As you swipe across the dashboard, you'll see additional widgets that I think will be super helpful as well for people.
Brilliant. Right, MK London is saying here, if you overpay your mortgage, i.e., for example, max out the permitted annual value. So I'm assuming he's talking about overpayments there, the overpayment limit. Will this result in any negative impact with your lender if you choose to remortgage with them? No, not in my experience. No, it wouldn't do, because
yeah, I mean, you get hit with an early repayment charge if you went above the limit, so that would be the penalty. But in terms of they wouldn't. I've never heard of a scenario where if you overpay more, you get hit with the early repayment charge, then you get refused to be able to remortgage with that existing lender. I've never heard that before.
No, because I think the way you should look at it is the lender's going to make money anyway, and you overpaying your mortgage and having less to borrow against your property for them represents less risk as well. So they're just seeing it as an opportunity that for them to earn a little bit more money, albeit on a lower amount, because you've made overpayment. So yeah, you might have the overpayment penalty, but they won't penalize you in terms of when you come to remortgage with them at all. So yeah, someone's just saying here, this is a genius solution, very transparent. So you've done a great job explaining this, Janesh. Let's have a look. There was something else here. Oh, you actually have a customer here. Been
nice.
using since last April. It's been super useful for me. That's good. That's good. It's good feedback. Okay, so Rosemary is asking here, what if you already have a regular payment set up? Does the app take into consideration when it comes to max or minimums per month?
Yeah, so if you already have a direct debit, I'm assuming that's what that means. Then we will know because we kind of every month get a refresh on what your outstanding mortgage balance is. We'll see the kind of the regular overpayments that you're making having an impact in terms of reducing down the mortgage balance, but the interest savings that you'll see within the app won't take into account things that you're doing outside the app. It's like when you start to see you're on track to pay off your mortgage 12,000 6 months earlier and save £12,000 in interest, that's taking into account all the overpayments you're doing within the app. We don't look at anything you're doing outside the app. Generally, we see a lot of people who are making existing overpayments with their lender. They typically, what they do is they cancel their direct debit and then they use Sprive, because then they're getting full benefits of everything that's there. The early repayment charge allowance and tracking that. There's no way of us being able to try to second guess what you're doing outside the app versus within the app. I think that creates more danger. So we've not tried to kind of do that.
Okay. I think there was a follow-up from Rosemary here. Also, will this work if mortgage and main account for spending are at different banks?
Yeah, I mean, you just link any current account. So like you don't if you link a Revolut account, we'll pick up your mortgage at NatWest. You can literally link any current account that's available for open banking, and we will pick up your mortgage. So don't think that just because I have a mortgage with NatWest, that means I need a NatWest current account. The tech is smarter than that.
Good.
Just think about the. Sorry, that was the last thing I was saying. Think about the account that where you have money that you would make the overpayments from, and link that bank account.
Perfect. Ghosh is just saying he's going to download now. And he also said here, I wish I'd been overpaying my mortgage since I got it in December 19, as it was 1.6 first 2 years and now 9.96. But in February 24, I remortgaged, so maybe pay off as much as I can. Yeah, I mean, look, on this note, I mean, typically within the mortgage space, they say that you've got 3 months to be able to remortgage, where you can shop around. Actually, you can start doing it from 6 months. So if you're going to be in February, you could probably start looking, what's that, probably in about September or so, roughly. So not far away now, to see if you can secure yourself a little bit of a rate. But making overpayments or doing something to at least pay down a little bit extra on the mortgage is probably going to be a good move as well for you.
Yeah, and just on that, obviously with the Sprive app, I mentioned that we scan the market every day for better mortgage deals. So when you hit that kind of 6 month mark, assuming that you can't find a deal that's better before that period, we'll let you know through the app. And so that's also kind of super helpful, because I know it's quite difficult sometimes to know when can I start this process. And so as soon as you hit 6 months, we'll let you know. The other thing is, if rates do start to fall, who knows, it might make sense to break your deal early, like make financial sense, because if rates aggressively come down in the way they've gone up, then you might find that actually, the early repayment charges, breaking early and locking a lower rate might be beneficial. So the app does that for you. It crunches the numbers, and it will say, actually, we think maybe rates have come down far enough. You're still in your fixed period, but maybe you should think about, based on your kind of your mortgage, to have a conversation. Again, we can help with those things if you remortgage with us, because we know everything about your early repayment charges. If you don't remortgage with us, then you don't get that benefit.
Perfect. Thank you. Cheers, Janesh. Debo's just asking here, does this overpay with the app apply to your current mortgage provider or to one that is recommended by the app? I think we've already covered this, but maybe you can answer that as well, Janesh.
Yeah, so it's your current mortgage. So as soon as you link your bank account and you provide us your name, address, date of birth, we'll basically show you a list of mortgages that we support that you currently have today. And once you select that mortgage, that's the mortgage that will help you overpay.
Perfect. Okay. Thank you for that. Two Wallace has put in a question here, and I think he's a little behind on the stream at the moment, because you can go back and catch up some of this and not keep in real time. We have kind of covered a bit of this. He's saying here, for example, if I pay £100 to a certain merchant that I flagged in app, for example, I said it so I buy a pint and it takes an extra 10% to go to my mortgage, as I flagged this type of payment to the mortgage. That would be amazing. So you do have the ability. Can you flag per merchant within the app?
So every time you go to, say for example, you're at the Harvester or Miller and Carter, an example, and you spend X amount, you type in that amount, and per transaction you will then earn the cash back immediately, and then you because you pay us for the full value of what you've purchased with that merchant, you'll then get if it's a QR code, you'll get a QR code. If it's like delivery, you'll get like a code. You then type that in a merchant, that pays for the entire basket or the kind of receipt that you get, the bill that you get, and the money just gets credited to your Sprive account automatically. So they're two separate bits. So think about with the app, it's you need to select the merchant, the brand. B, work out how much you want to essentially pay for with that merchant. Once you type that in and you pay for that through the app, you'll get something that essentially settles the bill at the merchant, and automatically behind the scenes the money will just hit your Sprive account, which with one tap you can then pay it to your lender. There's other ways of essentially doing this that might be a little bit more like friction free. Like some people might say, oh, this is a little bit annoying, why can't it just be automatic? The reason being, just for full transparency, is none of the grocers would work in any other way. And for me, it was so important getting brands like Asda, Sainsbury's, M&S, Morrison's, because that's where a household does majority of their shop on a regular basis. That's where our customers are going to get meaningful impact in terms of paying off their mortgage faster and saving interest. So there are more like, and over time, I've got ideas in my head on how I can make this journey even slicker, but that's the way it currently works.
Yeah, cheers for that. Thank you, Jinesh, and thank you everyone for watching this. By the way, really do appreciate your time. I know that it's running up to about an hour right now, and that's kind of where I want to keep it in terms of maximum time. In terms of people finding you to follow your journey, you mentioned LinkedIn. Are there any other social media outlets or places where people can find you?
Yeah, so in terms of myself personally, LinkedIn is the place to connect, and that's more around. I talk a little bit about Sprive, but mostly it's my entrepreneurial journey. But it's a great way of like contacting me if there's specific things you wanna ask me, and I'll do my best to respond to that. In terms of Sprive, obviously if you're interested in the app, head to the App Store, Android, iOS. We support 12 of the largest lenders in the UK. Over time, we'll add more lenders, but we cover 80% of the market. So if you've got a mainstream lender, there's a good likelihood that we'll be able to support you. If we can't, add yourself to the waiting list. Once I get around to making that happen, you'll get notified, and then you can also be on board. In terms of, we're on social media, so we're on like LinkedIn, Instagram, TikTok, Facebook, Twitter, so all the main kind of social media channels where you'll kind of get updates around things that are happening and campaigns that we're running and things that are happening with Sprive. And obviously, if you're still not convinced after listening to this podcast and you just want to find out a little bit more information, Sprive.com is our website, and you can read more there.
Brilliant. That's great. So I'm going to add a load of stuff in the comments. I'll pin it right after we finish this live. So go check it out. Like I said, the QR code is there. Please use that. Just full disclosure on this. You get £5 towards your mortgage. I get £5 as well. But hopefully this is something that you found interesting. And thank you, Jinesh, for giving us an hour of your time on a Sunday evening as well.
No, thanks for having me.
Good, man. All right. So guys, I try to make sure that these kind of things are as, I guess, helpful and informational and educational as possible. And yeah, there's a lot of, I guess, confusion and worry at the moment around interest rates. I thought this would be generally helpful. And by judging by the amount of people that have actually watched this and have been on the live, I think this will probably go down quite well. If you do have any questions or any suggestions of other things that you're worrying about, or maybe would like another discussion about like this, then by all means do let me know. Do me one favor though, if you haven't already smashed the like button, please do smash the like button. It really does help with the YouTube algorithm, just in terms of it being pushed to other people who may be in the same position that you're in, who need to see and listen to what the conversation we've just had. And if you haven't already subscribed, if you're completely new to the channel, this is what I try to do. I try to bring my 15 years worth of experience in financial services to kind of help people make better financial decisions. That's really what it's all about. So I appreciate you and every single one of you for paying attention and listening attentively and interacting with us this evening. Whatever it is that you're doing for the rest of your Sunday evening, make sure that you try to enjoy it, and we go again next week. Cheers.
Yeah, surprise, a little different than you're used to. Yeah. Dropping these bars on YouTube, knowledge I introduce you. Yeah. We chasing this money like it's the prize, it's the voodoo. Fugazi, it's just a lie we buying into. We need some cars.